got a lot of love for my Canadian people all of a sudden. That's not a good thing. When Jason M4 is talking about your country, it's not usually a good sign. Every now and then it is. Like when Hungary decided we're getting rid of GMO foods and GMO crops and stuff. I did a little parody for my people in Hungary. There's an old band from the 90s called Temple of the Dog, I think. And the name of the song is Hunger Strike. Jason Ford did one. Not I'm going hungry. I'm going to Hungary. Um, I'm not going to link that, but if you want to find it and listen to it, that's up to you. Wasn't one of my best, but it is out there. It is official. Canadian bank depositors are at risk of bail-ins. Quick, look surprised. Keep in mind, what is a bail-in? A bail-in is not a bailout, but that's not the answer I'm going to give you. A bail-in is when you are a bank depositor, right? You have an account at the bank. Your bank has FDIC insurance or whatever insurance. I don't know if they have that in Canada or what you call it in Canada, but I'm sure you have something like that. And let's say it's $100,000 and you have $150,000 in your bank account and the bank needs a bailout. Not going to get a bailout again. Already got one. Now it's going to get bailed in. What is a bail-in? Oh, you're $50,000 over the FDIC insurance limit. We'll take that 50K. Thank you. Now, naturally, you would think if I just gave a bank 50K, do I get shares of that bank? Or am I like part owner? Am I going to go like to a board meeting? You know, I'm a board member now? Or no, no, you pretty much just lost it. Hang on 1 second. It's pretty much good day, sir, like Willy Wonka said. Good day. But I thought I got 50 million. Good day. What about my 50,000? Good day, sir. Okay. Earlier today, which was a couple days ago, to be honest, Canada's new Liberal government unveiled a stimulus budget meant to revive slumping growth with a surge in infrastructure structure spending and said it would run a deficit nearly 3 times larger than promised during last year's election. See how that works? Promise, 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 promise. I'm elected. Okay, now the truth has to come out somewhat. Um, that deficit we were talking about when you guys elected us, yeah. Uh, I need to do a redo a do over on the speech. Do over on the speech. It's gonna be 3 times larger than we anticipated. Hold on. You you missed that one. You misquoted me. It's like, hey, can you quote me for to replace my driveway? Got a big crack in the cement. Can you give me a quote on that? Yeah. You came over. Yep. Did your measurements? Yep. Okay. What's the price? Next week you come back. It's actually 3 times what I know I told you $2,000. It's gonna be like 6. What happened? Did concrete go up? Like, did the mob take over again, or what? The government projected a 29.4 billion deficit for fiscal 2016 to 17 and gave no target date for returning to a balanced budget. This budget broke virtually all pledges the Liberals made before the election, including running just 3 years of deficits up to $10 billion before balancing the books in fiscal 2019-20. Quote, we are seizing the opportunity to invest in people and the economy and to prepare Canada for a brighter future, Finance Minister Bill Morneau said. What he is really seizing is the Bank of Canada money printer, because in order to monetize the surging deficit, the Bank of Canada will soon have to unleash its own quantitative easing in the coming months. As Reuters adds, because the Liberals command a majority in the Canadian Parliament's House of Commons, the budget is guaranteed 3 times or not over to pass, which is bad news Not so much for the Canadian dollar, which will certainly devalue in the coming months as the market prices in what a massive surge in deficit spending means, although so will all other currencies as the global debasement race accelerates once more in a few short months. But for bank depositors, because deep inside the budget announcement, in the section discussing tax fairness and strong financial sector, oh, I bet it had good news in there. We have official confirmation that Canada has just become the latest country to treat depositors as the bank creditors they are, and as such, they too will be impaired or bailed in the next time a Canadian bank needs to be rescued. In the specific text, introducing a bank recapitalization bail-in regime. It says to protect Canadian. Let's, oh God, if I had a silver ounce every time I had to mention this. The legislation and the stuff, the titles they give it, right? The Patriot Act, the Saint Germain Banking and Savings and Loan Crisis, the Saint Germain, oh, saintly, patriotic Patriot Act, the Affordable Care Act. Oh, who cares? Oh, it's really unaffordable. So, what's the first sentence? To protect Canadian taxpayers in the unlikely event. Unlikely. No, no, I've got news for you. Extremely likely, if you want the truth. Realist news, that's my pledge. I can't hide it from you. Very likely. To protect Canadian taxpayers in the unlikely event of a large bank failure, the government is proposing to implement a bail-in regime that would reinforce that bank. Shareholders and creditors are responsible for the bank's risks, not the taxpayers. Oh, so the bank's shareholders and creditors are responsible. Oh, really? Let's read on. This would allow authorities to convert eligible long-term debt of a failing systematically important bank, in other words, too big to fail bank, into common shares to recapitalize the bank and allow it to remain open and operating. Such a measure is in line with international efforts to address the potential risks to the financial system and broader economy of institutions perceived as too big to fail. The government is proposing to introduce framework legislation for the regime along with accompanying enhancements to Canada's Bank Resolution Toolkit. I used to be a mechanic. I, I thought I used to have a little toolkit. Canada's Bank Resolution Toolkit. Wonder if it's got the same stuff I had in my toolkit. Regulations and guidelines setting out further features of the regime will follow, so we don't know the details yet. This will provide stakeholders with an additional opportunity to comment on elements of the proposed regime. Bail-in regime for banks. Canada's financial system performed well during the 2008 global financial crisis. Since that time, Canada has been an active participant in the G20's financial sector reform agenda aimed at addressing the factors that contributed to the crisis. But if you performed well during the crisis, what crisis did you have? This includes international efforts to address the potential risks to the financial system and broader economy of institutions perceived as too big to fail. Implementation of a bail-in regime for Canada's domestic systematically important banks would strengthen our banking resolution toolkit so that it remains consistent with best practices of peer jurisdictions and international standards endorsed by the G20 or endorsed by the club. This new bail-in regime is spun as benefiting taxpayers. What isn't mentioned is that most of those taxpayers who will be protected also happen to be the impaired depositors, also known as creditors, in these soon-to-be bailed-in banks, which begs the question, just who or what is being protected here? Should oil remain at its current price or drift lower again? We will certainly find out in practice, because even Canada's regulator is now warning there is far less stability than meets the eye behind the rock-solid balance sheet facade of Canada's banks. I have to agree. If I didn't agree, I probably wouldn't be reading this to you because it would be nonsense, and I'm not going to waste your time with nonsense. So when you read the first part, it sounds like, bail-in regime that would reinforce that bank shareholders and creditors are responsible for the bank's risk, not the taxpayers. But you're a taxpayer and you use that particular bank? Yes. It's a too big to fail bank, right? Yes, which means it has a whole bunch of taxpayers, right? The big banks have most of the lion's share of citizens using them, correct? Yes. So then you automatically become the creditor when that bank fails and needs to be bailed in. And if you have more in your account than what the insurance limit is, the rest of that gets given to the bank. And I started to read, I was like, does that sound like you become some kind of shareholder, right? Because it said it's somehow converting, where was that at? Hang on. Let me pause this so you don't have to stare at me. Okay, so here's the part. To protect Canadian taxpayers in the unlikely event of a large bank failure, the government is proposing to implement a bail-in regime that would reinforce that bank shareholders and creditors are responsible for the bank's risks, not taxpayers. But again, you become a creditor, so that's you, taxpayer. This would allow authorities to convert eligible long-term debt of a failing systematically important bank into common shares to recapitalize the bank and allow it to remain open and operating. So my question is, if you're in, it says you're going to convert eligible long-term debt into common shares to recapitalize the bank. Does that mean the person who bailed out the bank without their permission, of course, oh, you're over the limit, we're taking that, oh, you got 150,000, the limit's $150,000 to us. Does that mean that the person now has $50,000 of these new shares, or are these new shares just going to be sold out on Wall Street for any schmuck to come up and buy? Because it said there, uh, this would allow the authorities, so the government, to convert eligible long-term debt into common shares. So if they're converting them into common shares, that to me sounds like they're just going to sell these shares to the open market. So could you imagine if there's a $100,000 insurance limit, you got $150,000, you've just lost $50,000 given to the bank. The government takes some of that bank's debt, converts it into these shares, and then says, okay, bank, go ahead and sell these out on Wall Street. Now, naturally, you'd say, well, hold on. I'm at least getting $50,000 worth of those shares, those common shares, aren't I? But I don't read any of that in here. So maybe that's, when it said later, the regulations, guidelines, setting, blah, 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 will follow. Can't wait to hear what those guidelines and regulations are. But no matter what, this is the writing on the wall for those who are blind that the too big to fail banks and a lot of other banks are going to be failing. You don't do this unless you're expecting failure. It's quite simple. But wait a minute, the Dow Jones is back in the 17,000s and that USA dollar strong? Or is that smoke and mirrors? And we're all about to find out. I guess we're going to have to wait and see.